Hi, everyone. Welcome to your weekly mortgage and interest rate update. Let's break down what happened last week and what to look forward to next week. On last week's economic calendar, we had a big moment when Fed Chair Powell testified. He made it crystal clear that the Fed has no intention of lowering the federal rate at their next meeting in 31 days, and that's going to be on March 19th, so put it on your calendar. While the federal rate does not directly impact mortgage rates, it's still one of the key indicators that we like to watch closely. On Wednesday, the CPI, or the Consumer Price Index inflation report, was released for January. It actually came in higher than was expected, and that temporarily did push mortgage rates up. But in a turn of events, the next day, the PPI, or the Producer Price Index, another major inflation indicator, came in better than was expected, leading to a positive impact on mortgage rates. Thursday brought initial jobless claims, which were lower than expected, and Friday's data brought core retail sales, which excludes automobile, gasoline, building materials, and food services. It's more important than the broader retail sales numbers, which also came out on Friday. They came in lower than December, but they didn't drop as much as was expected, so that was good news. These figures are complex, but very important in determining economic momentum and when watching the mortgage interest rate industry, right? The bottom line is that overall mortgage rates initially spiked last week, but ultimately they settled back near where they started. And the best news of all is that by Friday, the 30-year fixed rate ended with a 6 handle. This is great news for all of us in the real estate industry, in the mortgage industry, and if you are shopping for a home or if you want to refinance, right? So looking ahead next week, watch the following economic events that could influence interest rates. On Tuesday, President Trump is going to be speaking, and there will be potential market reactions to follow. Wednesday, housing starts data is released. Thursday, initial jobless claims are released. Crude oil inventories released. On Friday, manufacturing PMI, services PMI, and existing home sales are released. Another noteworthy news, a major development last week, was an interview with the Treasury Secretary, the new Treasury Secretary Scott Bessent, where he emphasized that the Trump administration is more focused on long-term yields rather than the Federal Reserve's immediate actions. He stated that the 10-year Treasury yield is the key indicator to watch and expressed a commitment to lowering rates altogether. Another hot topic of the discussion, the rising U.S. debt, of course, and tariffs. Lots of risks related to tariffs. These insights are critical, so make sure to stay informed. Final thoughts. I want you to know that it is a fast-moving market, okay? I'll be keeping a close eye on these developments for you. Be sure to like and follow if you want to stay up to date. If you want more day-to-day information, you can follow me on Instagram and check out my stories because I'm posting daily on mortgage interest rates and the real estate industry. Let's make it a great week ahead. Thanks.